All right, let's get to Uber earnings now. Those shares down 6% today after the company's first quarter results revealed gross bookings fell below estimates. For more on the numbers and what they mean for the ride-sharing giant moving forward, we want to welcome in Ali Mogharabi, WestEnd Capital Management Senior Equity Analyst. Ali, congrats on the new position, by the way. Good to see you here in a different role. So this really caught a lot of people by surprise. Were you surprised by the numbers? And what was the biggest source of that surprise?
Well, actually, we were not necessarily surprised by the numbers. We think that they were very, very strong. You've got very strong growth in gross bookings. You've got strong growth in total revenue. Both of the main segments performed very, very well, whether you're talking about mobility or delivery. And our biggest takeaway was the network effect of this entire platform continues to strengthen. So you've got user growth around 15%. You've got their frequency increasing at around 6%. And a lot of that growth, and we're talking about revenue growth also, a lot of that growth wasn't necessarily driven by higher prices. It was actually driven by higher demand, again, in the two largest segments. So overall, we were pretty pleased. And of course, let's not forget, we just talked about the top line. Let's not forget about the bottom line. Margin expansion on the EBITDA side. So we were actually pretty pleased. We think this is an overreaction to a slight miss on mainly the bottom line, which was basically a decline in the unrealized value of the equity investments that these guys have.
I'm interested, Ali, to drill down specifically into Uber Eats. Just get your take on that segment, Ali, and how much of a growth driver you think it is for the company looking ahead.
It's actually, well, first let me say this. It's very surprising that these guys still continue to grow, right? I think it was around 17%. We're a few years away or a few years past the COVID. And looks like consumer behavior has actually adopted to ordering online and for delivery. So we still are very confident about continuing growth in the mid-teens going forward. And also, of course, let's look at the further expansion that these guys have when it comes to groceries and other retail, and the partnership that they've got with Instacart. I think they announced it yesterday. So we think that will provide additional growth. And then besides that, let's talk about advertising. I mean, these guys, we talked about user growth, I think 149 million. So, you've got a very wide audience. And I think the CPG, consumer packaged goods brands, want to expose their brands on this widely used platform. So on the delivery side, I think the high margin ad revenue will also contribute to growth. So I'm pretty confident about the continuing growth in the delivery side of the business.
Ali, I do want to ask about two things that there seem to be concern around. One of them was about cooling demand in Latin America. And secondly, there's the continuing sort of regulatory overhangs that are uneven, sort of depending on what region you're looking at. Are those a concern for you?
Not necessarily. The first one is somewhat seasonal, you could say. The second one, from a regulatory standpoint, let's look back. I mean, I've been following this company, covering this company for a long time before their IPO, and they've continued to face regulatory threats. And what we've realized is that the platform itself is so effective in terms of satisfying demand by the users that it's created that network effect that the users will continue to come on. And it's become somewhat of a, you could say a necessity. So some of those costs that they may additional costs that they may incur because of new regulatory measures could actually be passed on to the consumers and or to the merchants. So from that standpoint, I'm pretty comfortable that these guys can overcome this. And to a certain extent, they've been very successful in actually reaching compromises with the lawmakers at various levels, whether it's at the community level, the state level, or the federal level. Again, I'm pretty confident that management will approach these the way they should, of course, in different regions, different markets.
Ali, when you look at the results, both for Uber and Lyft, any kind of broader takeaways you had about the state of the consumer? Because I was, Ali, I was actually impressed how they both sounded generally positive on the consumer.
Yeah, I was too. Consumer spending continues to move along. various indications that, from a macro standpoint, we're not necessarily in a recession. And as I mentioned before, consumer behavior has adopted very, very well to these platforms. Or you could also say the other way around, the platforms has adopted to consumer behavior. So the network effect of both firms, in my opinion, both Uber and Lyft, remains strong. Of course, we prefer Uber. Mainly because it's more of a diversified type of business, and we saw the benefits of that during COVID. But yes, both are actually situated pretty well in an environment where consumers continue to use the platforms.
Ali, it was great having you on the show today. Thank you so much for joining us.
Thank you.